So the stock market took about 0.2% up notch yesterday, the third trading day of the week, on the day that the central bank conducted primary market auction, sending 91-day Treasury stop rate to 5%, the lowest we've seen in Nigeria's market history. Let me ask Abiodun Kerekwe, who is the head of investment research at AfriInvest, is live to us from the stock exchange trading floor. What he thinks about where all of this is going with the portfolio asset rejigging. Abiodun, good morning. Let's get you squawking to this particular development. Where are we at the moment? What's the frenzy all about? How scared or concerned are folks right now with the yield curve on treasury bills heading for the water?
Good morning, Bronson. Yes, a lot of people are worried. The market indeed is worried, you know. It is no news that the CBN has basically skewed local investors or local corporates away from the OMO market and squeezed everybody into the T-bill end of the market. The implication of this is that we have a whopping amount of funds that are chasing barely 20% of the bills in the market. OMO probably accounts for like 85% of all the issues in the secondary market, basically. However, T-bills account for roughly about 18% of that. So we're seeing around 300 billion on average chasing this segment of the market at every primary auction. So speaking to the last auction, really, the CBN sort of offered 45 billion, and there was a whooping close to 400 billion chasing after the 45 billion. The issue was strictly or strongly oversubscribed. We see subscription for the 191-day bill at about 12.2 times, while the long end, which is a 364-day bill, has subscription touching about 6.1 times. On average, that comes to about 7.9 times average oversubscription. That shows that there's so much liquidity in the system that's chasing after this bill. And speaking to the yield on its own, the yield also compressed sharply. We could see yield compression for the 364-day to about 6.88% from about 9.1 times at the last auction. Also for the 91-day bill, also we saw the yield compress to 5% from about 6.4% at the last auction. So this doesn't sound good, but it depends from which perspective you're looking at it. From the perspective of the guys who dominate the market, which are the PFAs, I mean, for them, they are more concerned about capital preservation over returns. So for them, they're ready to wait. They are ready to keep playing at the market as long as the CBN leaves them at that end. And if yield compress to 2%, they're probably ready to keep investing at that level. For them, they're key about capital appreciation. But the question is this trend likely to change anytime soon? From indication, it seems it probably may not. You know, the last time we saw yield compress this aggressively, it didn't last for more than about 1 to 2 weeks. But this is probably, extending into months now, and we're rolling into 2020, and the outlook really doesn't suggest that CBN is likely to backtrack on the policy action anytime soon. So which is worrisome for the market and worrisome for investors, because when you have inflation at the levels where it is, around 11.6%, it just implies that we're dealing with negative real return. But then it is still no news if globally we're seeing negative yields across some of the advanced economies. We're seeing negative interest rates there. So it's really no much of a worry for them. But however, because we are a developing market, we have FX, foreign exchange risk to deal with. We have other risks to deal with, even from the fiscal angle. So this sort of put pressure on all of the variable in total.
Abiodun, EBITDA full year 2019 for MTN Nigeria, margin forecast to 52.8%, lowering, however, its revenue growth for full year forecast to 13.5% from 15.9%, but says MTN Nigeria will still have a pile of cash, nearly 410 billion naira by the end of the year. That's the cash flow. So let me just ask Abiodun Kerekwe, who from Afrinvest has been sitting there at the trading floor for us. Abiodun, thank you so much. This is a big story from MTN. What's your take on this company?
Yeah, so MTN, like we all know, is about the biggest ICT company in Nigeria. I mean, SSA put together, basically, you know, and those numbers are pretty strong. It still continues to reflect how deep they are in the Nigerian market, I mean, reflect their footprint across, I mean, the Nigerian geopolitical zones, you know. And those numbers, we don't expect those numbers to come below these levels. We don't see any negative drivers to their performance anytime soon, you know. Even though we talk about weakness in consumer spending and you know, consumer purchasing power and all of that, but they render services which, regardless of how weak consumer purchasing power is, you still find people, you still find numbers rolling after their services, you know. So year on year, we sort of still think the company is a buy. I mean, at Afrinvest, our valuation on the company still suggests that the company is still a buy. I mean, we still have a buy rating on the company. And looking into 2020, we continue to think that our massive population will continue to support their performance, you know, even though we still don't think there's going to be significant improvement in consumer purchasing power, but I mean, the proportion of spend on ICT, voice call, data would remain possibly at this level. We might see marginal decline or increases depending on individual pockets, but by and large, this would not mean so much negativity for the company's performance in the near term.
A final one, in just about a minute, if you can do that. If you look at where we are right now, where we started the conversation at the opening of the show, Abiodun, vis-a-vis the fixed income market, the new yield curve we're looking at, and the yield environment, broadly speaking, and the stock market, where you see it, what's the outlook here for both institutional and retail investors? Their choices, what are you hearing about moving forward, looking at the new yield environment?
I mean, I don't think nothing is going to change looking forward in terms of how funds flow. The big players in the market are still the PFAs, the large corporates, and these guys pay a lot of attention on capital preservation. They probably are ready to take a 2% yield or a 2% rate on the massive funds they sit on. So they are probably ready to do the waiting game. So I don't see from their angle they looking like they are going to shift their allocation or shift their views on where to put funds and all of that. I mean, there are other windows. Infrastructure is there for them to look at, but we're not seeing huge traction in that direction. That said, on the part of the CBN also, two things. Probably the CBN could backtrack on the policy, which we don't think is going to happen anytime soon, or CBN could then include them in the secondary market for OMO activities. I mean, but that said, still, we don't know if CBN is likely going to do this or backtrack on that policy statement anytime soon. So, on the back of this, we don't see much of liquidities leaving the fixed income space, even though the system is quite awash with liquidity. There's probably close to about 344 billion of system liquidity as of opening balances this morning. So, I mean, looking into that and how that affects the equity space, I don't see, we think we're going to see huge fund flow, or in terms of a reallocation into equities. I don't think we're likely going to see that as we progress into the new year. Yeah, maybe just a bit, maybe just on a particular investor basis. Yeah, they might reallocate funds into equities, but the quantum wouldn't be so significant that it's going to change the story in the equity space.
Right.
But the key selling point in the equity space still remains the the fact that we're getting close to into the first quarter of 2020, and we're likely to be seeing companies declare their full year numbers. Dividends will be announced. And for the equity players, they are looking.
I guess they
have an eye out on these dividends.
Abiodun Kerikwe, thank you very much, Head of Investment Research at Afrinvest. Thank you so much for sharing your thoughts with us this morning. Let's continue that conversation. We have a very few minutes, about 1 or 2, to wrap up the show. Ajibola Ero Phillips, who is the Head of FX Trading at FBN Quest Merchant Bank, is joining us via Skype from FMDQ Exchange Place. Ajibola, continue to flesh up that conversation with Abiodun Kerikwe for us around what you saw yesterday from the primary market auction and what everyone is positioning for right now in terms of the size of the liquidity on the market and the yield curve heading for ground zero.
Hi, Bossy. Yesterday there was a PME auction, like you mentioned. 45 billion was sold, but yields came really depressed. The short channel came at 5%, big channel came at 6.19, and wait for it, the long channel came at 6.8% at against 8.37 the previous auction. So yields are really depressed. There's a bit of liquidity in the market. The normal auction today, about 350 billion is on offer by CBN. We don't expect a lot of changes on the home auction. A lot of it is in the NTB where the yields are really depressed right now.
Okay, Ajibola, first, I do apologize to you and our viewers. The quality of that internet connection was not so good. We need to cut it at this point. Thank you so much, Ajibola Ero Phillips, Head of FX Trading at FBN Quest Merchant Bank. Of course, the story you heard was MTN Nigeria, Chapel Hill, Denham, an investment bank and securities trading firm, trim its full year 2019 revenue growth forecast to 13.5%, a bit that was raised to 52.8%, retained its buy rating, but lowers its target price 12 months for MTN Nigeria PLC to 180 naira 38 kobo. That's where we leave it for today. I'll see you again tomorrow morning, Friday, the 13th of December. Goodbye from Lagos.